And
or you could.
yeah, all jokes aside, I mean, we entered 2021 thinking that China was going to be the biggest challenge for the White House, and while it is a strategic challenge, to borrow the words of somebody all jokes aside, I mean, we entered 2021 thinking that China was going to be the biggest challenge for the White House, and while it is a strategic challenge, to borrow the words of somebody all jokes aside, I mean, we entered 2021
Hello everyone and welcome to today's live stream. Could I just quickly get a comment from you? I just want to make sure that you guys can hear me. If someone could just let me know if they can hear me or not, that'd be great. I'll just wait to see that you guys can hear me and then I will commence today's live stream. All good, fantastic. Thank you very much. So guys, welcome to today's live stream. This is something that I would like to do on a more regular basis going forward. It's something that I've been wanting to do for a while now. I did trial it, I think it was about a year ago, where I did actually do some live trading sessions. But, you know, I want to do more of a in-depth technical analysis of certain key markets that I myself trade and the rest of the team here on my streaming service and private Telegram group chat. So how today's going to work, we're going to start with the indices. We're going to look at the Nasdaq100, the S&P500, and then that's going to be followed by the gold markets. Then we're going to have a look at the crude oil chart, and then shortly after that we're going to have a look at some top US stocks that I currently have my eyes on, that I'm currently trading. And then after that we are going to have a little look into the world of crypto. And crypto is a new industry that I've started to cover this year, and I know that many of you trade it. It's a very popular market, it's very trendy at this moment in time, and there's some fantastic amounts of money to be made over in the crypto market. So we will briefly touch on that towards the end of today's video. Before I start, guys, if you haven't already, I just want to start by saying to go and give my streaming service website a brief look. I've launched this about a month ago. This is something that I'm going to be really marketing going into 2020. It's a fantastic streaming service. We charge pretty much a similar price to what you'd be paying to have the likes of Netflix, and it's got the exact same principle as Netflix. It's a streaming service where I post pretty much daily videos analyzing in more depth. Of course, you have my YouTube channel if you're not quite ready for the streaming service. Over on my YouTube channel, I post daily videos analyzing the markets. But this streaming service, I go into more depth. But on top of that, I also give you access to our private Telegram signal group, and we also have some educational content down here towards the bottom. So if you would like to go and check this out, we charge a very small fee of $19.99. You can head over to dailymarketmovements.com and join. But let's start with today's video. Let's start with the indices. So in front of us, we're going to start off with probably my favorite index, that's the Nasdaq100. Now, for those who do not know what the Nasdaq100 is, it's a basket of stocks which follow tech stocks. So we have 100 of the top biggest tech stocks in the US, and the Nasdaq100 has been one of my favorite indices, as I just mentioned, due to its performance over the past decade. We have skyrocketed up towards this 17,000 price level, and especially since March 2020, I think we've had a well over 100% gain in the past 18 months. We've actually increased 150%, and you only have to really zoom out to see how much of a gain that has been over the past over the past year and a half. We really have accelerated very, very fastly. But we're not really going to look at the medium to longer term at this moment in time. I'm more focused on the short term. Now, the Nasdaq100 continues to trade in this uptrend. That's what this white line represents on your screens. As well as that, I just want to make you all aware of the indicators that I will be using for today's video. Of course, those who've been watching my videos for some time now, you'll know that I like to use the RSI indicator, otherwise known as the Relative Strength Index. This basically tells you whether a particular asset is overbought or oversold. Anything above the reading of 70 means it's overbought. Anything under the reading of 30 means it's oversold. So for example, here when we were trading as high as 78, that meant that we were overbought, and that's why we kind of saw a nice move towards the downside. But I will go out and share that currently at this moment in time we are bullish on the Nasdaq 100, and I'm happy to share with you a trade that I myself and the rest of the team over on the streaming service have opened. We bought the Nasdaq 100 down at 16,050. That's what this green and red box indicate. Where that grey line is there, down at 1650, that's where we opened this trade. We have a take profit all the way up at 17,000. 17,000 has been my end of the year target. Whether we will get there or not, well, we will soon find out. But we're only a few days away now until we do enter it into 2022. But nevertheless, we're up at those all-time highs, and I'm very happy with how the Nasdaq 100 has performed over the past couple of months. But we bought at 1650 due to the fact we connected with the 50-day EMA, and we have bounced off that 50-day EMA where the bulls have taken full control of this market, and we've gone and targeted towards the all-time highs here. Now, the Nasdaq 100 I really do like. We had the Fed come out last week, I believe it was, or the week before, and announced that the tapering process will be accelerated. For those who do not know, we have $120 billion getting printed out every single month and being injected into the financial markets through different bonds, etc. And the Fed has come out and said, to tackle inflation, we really do need to accelerate this tapering process and then eventually hike interest rates. And I think that this is a good thing. Normally, hiking interest rates is very bad for tech stocks because they have high valuations, and investors, for example, they will calculate how much they anticipate a certain tech company to be making in 5 to 10 years' time. These are what you call growth stocks, and of course, interest rates have a big part as into how much money these companies may be taking in, in those 5 to a 10-year period. But all of a sudden, once you get interest rates that have been hiked, that then means that these traders then have to take a step back and do their recalculations. And of course, higher interest rates means that a company is paying probably more interest on loans. For example, if they, if they've taken out loans to hire office space, etc., that of course has an effect on their overall future projected cash flow, and that will of course negatively impact the company. So higher interest rates are typically bad news for tech stocks, especially the high growth names, and the Nasdaq 100 is normally one of the first baskets that will get heavily affected in a negative way when interest rate hikes are announced. And that's kind of what's happened during this period here. If I just box it out, we've seen that negativity come in. I think we fell roughly 5% from the highs. Let me just have a look. Yeah, so we fell 5.66% in the past couple of weeks when there was news of these interest rates being hiked. But medium to longer term history has shown that interest rates are in fact bullish for stocks, especially growth stocks. So I see this as a fantastic buying opportunity, and that's why I sent out the buy signal down at the 50-day EMA. But the good news is that investors have been given certainty, and that's because Jerome Powell came out and said that we do not expect any interest rate hikes prior to the end of the tapering process. So the tapering process is set to finish in March 2022. So now traders can look at this basket, the Nasdaq 100, and think, well, fantastic, we now know that we are not going to get an interest rate hike prior to March. So that to me tells me that we are bullish up until March 2022. And I think that, once we do get that first interest rate hike, that's when we'll get a good indication as to when the next one may occur. So for the short term, I really do like the Nasdaq 100. I think we will continue to go and rally up towards 17,000. That being said, if you're watching this video at this moment in time and you're thinking, well, fantastic, Max has just come out and said that he likes the Nasdaq 100 and I believe it's going to go to 17,000. If you do not have a position in the Nasdaq 100, I personally would not enter at these all-time highs. Don't give into the FOMO. Many investors, especially retail traders, those who are new to trading, will look at this chart and think, well, fantastic, we've had 4 green days. The likelihood is that tomorrow will be green as well, and they'll go and buy a position up at these highs, and then just by luck, this is normally how it plays out, is that one day when you get in is when the market, of course, has a bad day. And, I would not be surprised at all if the Nasdaq 100 pulled back towards a 50-day EMA. You only have to zoom out to say, well, okay, well, you know what? We're up 150% since March. If we did have a breakdown of 3%, well, that's absolutely fine. And, if you was one of those retail traders probably trading on a high amount of leverage, buying up at these highs, well, you're only really targeting let's say 3% for it to go up to 17,000, where the 50-day EMA is down 3%. So that's a 1-to-1 risk-reward ratio, and that is not good enough. As an investor, what you want is a positive risk-reward ratio. So you want to be looking at entering these trades near that 50-day EMA, where you can say, well, if we do see a move up towards 17,000, that represents a 6.15% gain towards the upside. And let's say if you put your stop loss just below the swing lows that occurred on the 21st of December, with that, you're risking around 3.9% to gain 6%. So all of a sudden, that gives you roughly a 2-for-1 risk-reward ratio, which of course is a lot better. Oh, sorry, there goes one of my alerts. So yeah, that's what I'm trying to get at here, is that yes, I do believe the Nasdaq 100 will go higher. That's my short-term to medium-term prediction here up until March 2022. I think that we could even slice through 17,000, but on the flip side, I would not be surprised at all if we did have that pullback down towards the 50-day EMA. So if you are a retail trader watching this video and you haven't yet got a position in the Nasdaq 100, I would advise that you stay on the sidelines. But everything you hear during today's video is not financial advice. I'm just sharing with you my opinion on these markets, and it's up to you whether to enter or not to enter. But my advice would be not to enter on the Nasdaq 100 if you haven't already, due to the fact we're up at those all-time highs, and the risk management strategy, if we did go towards 17,000, it's just really not in your favor. Let's move over to the S&P 500. S&P 500 is slightly different to the Nasdaq 100, and this is why I am bullish on the Nasdaq 100. You may be able to tell that the S&P 500 is trading up at an all-time high, where the Nasdaq 100 is still about 300 points below that all-time high. I think the all-time high for the Nasdaq 100 come in on the 22nd of November, where we did achieve a price up at around 16,760. So we still have another 300 points to go for the Nasdaq 100. Again, that's why I believe we will see that move up towards the 17,000 area, because the S&P 500 has broken above its prior all-time high at 4,744. And we're now trading at an all-time high. I think yesterday we did actually get as high as 4,800. And I would not be surprised to see the S&P 500 achieve 5,000 within the next 3 months. S&P 500 has been the best performing indice over the past 18 months. Over the past 12 months. So that's in the year of 2021. In second place, it was the Nasdaq 100. And then, of course, we had the Dow Jones 30, which is up around 18%, I believe, for the year. So the S&P 500 has just done, tremendously well, and it's been well supported by this 50-day EMA. On several occasions, especially during this period here, the 50-day EMA offered it a fantastic amount of support. And when the 50-day EMA has failed, we've gone down to this uptrend that we've been trading in since, of course, March 2020, when we had that massive buying pressure, which really has sparked this uptrend. But this uptrend has been that second level of support for the 50-day EMA, and only really on one occasion we have gone and tested that blue line, which is the 200-day EMA. So S&P 500, very, very bullish. It's in a very supportive uptrend here, and it will take a lot for the S&P 500 to break out of this uptrend. So again, like the Nasdaq 100, I like the S&P 500. I think medium to longer term, we do go higher. I think we go above 5,000. But I myself and my Signal clients over on the streaming service, we actually won a signal here. We bought down at 4,600. I was targeting towards the highs, and I think it was 2 days ago we achieved that take profit. So we currently do not hold any positions at this moment in time. I think if I go to my streaming service website, I posted a video. If I just scroll down, S&P 500 Signal 1, so I think I posted that a day or two ago, where I explained the exit strategy. So at this moment in time, we're currently sitting on the sidelines, just how I was explaining over in the Nasdaq 100. If you bought here aiming towards, let's say, 5,000, which would be around that price there, that the gain is potentially 3.8%. but you're also risking around 3.5%. So the risk reward ratio is pretty much 1-to-1. Not interested at all. If we had a pullback down towards that 50-day EMA, that's an area where you want to be entering into this market, because you can put that stop loss below those swing lows that we achieved back at the start of the month. That's, you're risking 2.99% and you're gaining potentially 7% up towards 5,000. Those are the type of trades you want to be getting involved in, especially if you're a retail trader, you're trading with high amounts of leverage. You really want to be cutting having those stop losses as tight as possible, and you want your upside to be a lot larger than what you're willing to risk. So those, that's where I currently stand at this moment in time with regards to the indices. I like them a lot. I would not be surprised to see them go higher, but on the flip side, I would not be surprised, and I don't think anyone would be either, if we saw it come down towards the 50-day EMA, which of course would be a fantastic buying opportunity. It's happened on several occasions in the past couple of months. We've seen these 5% moves. If I just get the percentage calculator out, there was 6%. If we go back to, I think this was September 2020, I traded this, made a lot of money in it. We had a nice 10% decline again here, back towards October. That was October 2020. We had a 10% decline, and that's even when $120 billion was getting injected into the financial market. So imagine what opportunities you're going to have once this tapering process starts to commence. So do not get involved at these high levels. Don't give into FOMO. Be patient. I know it's very, very difficult skill to have patience, especially when you're seeing all these news headlines, etc. But the key is just to be patient. Sometimes not trading is trading, and the best trade is no trade at all. Okay, that's a very good quote. I always say to myself, in fact, I've got it written up, all picture framed in my office. Sometimes not trading is trading. And that is the key here at this moment in time with the S&P 500. Okay, moving over to the gold markets. Now, the gold markets has been in a very long-term downtrend. Let's just get the date calculator here. So from when we hit those new gold all-time highs back in August 2020, it has been 509 days, so pretty much a year and a half that we've been trading in this downtrend. At first, it looked like a huge bull flag, and on several occasions, many investors were very excited, hoping that it would break out, and we nearly got that a few weeks ago. But unfortunately, it was a false breakout for the gold bulls, and we have seen the gold markets crash back into this downtrend. And over the past couple of days, we have been testing this. But if you were to watch one of my previous videos, I know that the guys over in the Telegram group chat, we do hold a short position. I'm not going to go ahead and share that position with you. You have to join the streaming service. I have got a video update. I think I posted one yesterday. Where is it? Where I do explain our entry and exit strategy with regards to the gold markets and our gold trade. But I think I come out on YouTube yesterday and I said that we were testing this resistant area, which was around 1815, and I fully anticipated that we would get rejected and trade back down towards a 50 and 200-day EMA. You can go and find that video. I posted it yesterday, and that's exactly what has happened. We're now trading down at 1790, and we are trading just slightly below that 50 and 200-day EMA. And the reason that I expected this to happen was because we've recently formed a death cross. That's where the 50-day EMA pierces below the 200, and then the 50 was it did attempt to break back above the 200-day EMA, which would typically project a medium to longer term bullish movement. But in the past day or so, we have declined, and of course that will now allow the 50-day EMA to continue its downside movement from that death cross that occurred back at the beginning of this month. So what am I looking for here for the gold markets? Well, first of all, I would kind of like to take out this uptrend that we've been trading in for some time. I think that's your first target down at 1780. If we can break below 1780 here, I think that could then trigger a lower move down towards the next Fibonacci level, which was that 0.23% fib level. So if we can break below 1770 and 1780, that of course should spark a move to the 1720 area. So if I just actually make that a little bit thinner for you. So the key levels that you kind of want to know here is the 1780, because that's where this uptrend is. So if I just put a price there, 1770, because that's where the 23% fib level is, and of course the 1720 area. If we can break below the 1780, we then go to 1770. If we break below 1770, that's when I'm looking for a move down towards 1720. But as well as that, I must say there is a fair bit of support around that 1750 area. We've seen on several occasions we have dipped as low as 1750 and found a bid, and gold has risen. But the reason that I am bearish here for the gold markets is it's not really from a technical point of view, it's more from a fundamental perspective. 2020, by no doubt, was the most, bullish fundamental time gold has ever had. I can't think back to when we last had an occasion where every single central bank around the world was having to cut interest rates down to 0%. Many central banks were printing billions, or if not hundreds of millions or trillions of dollars in the case of like the US, for example. They were printing money, devaluing their local currencies. This is an environment where gold typically thrives. And if there was ever going to be a time where gold really took off, I know that, there's a lot of older investors, probably some of your mum and dads or granddads, they probably own gold and store it under their beds, these massive gold bars, etc. That's the old-fashioned way of investing. And many of them believe that gold is going to go to the moon at some point. But this year, last year, was the perfect opportunity for gold to do that, to maybe go and test 3,000 to 4,000, because the previous all-time high for the gold markets was achieved in 2011 after the financial crisis, where we did achieve that. I think it was around 19,000. There we go. And we did, last year, I must give credit to gold. We did go and achieve that brand new all-time high up at 2,067. But, we kind of only just broke above the previous all-time high up at 19,000. And when you look at the situation that occurred back during the financial crisis, okay, it was bad. The central banks had to come out. They had to cut interest rates. They had to print a bit of cash. But this time round, it was 10 times worse. The US has had trillions of dollars printed, and gold can only go to 2,067. That to me kind of tells me that gold's time is up. Okay, gold had its chance to really break higher, and it hasn't really taken that opportunity. Yes, we did achieve a brand new all-time high, but only by about 100 points. Once this tapering process really does start to accelerate, once we do get these interest rates that start to be hiked, that's when I personally believe that we will see a complete breakdown here for the gold markets. And I would not be surprised if at some point in 2022 we did see that break below 1680, and we could even go and target this area here, which is around 1,500. I would not be surprised at all. In fact, I already have some money invested targeting around this 15,000 area. And this is money that, I'm not really looking at on a day-to-day basis. It's just medium to longer term. But 15,000, I think, is a fantastic target for gold going into 2022. Again, guys, this is my personal opinion. You may not agree with it. You may agree with it. It's completely up to you whether you want to act on, what I'm doing. But I personally am holding some money in gold, and I am going for 15,000 going into 2022. Short term, I am bearish in gold. I've just highlighted the key levels that you need to look at for gold to break down lower at 1780. If we can break down from this uptrend, this short-term uptrend that commenced on the 29th of September, that should then trigger a move down towards the next fib level, which is down at 1717. If we break down from there, of course, there's a bit of support around 1750, but if we can clear those areas there, we go to 1720. That's going to be a pretty key area to break. And then I think we go down towards 1680 to 1700, where we found support on two separate occasions, which was on the 9th of March 2021 and the 30th of March. So I'm bearish gold, my bias, but many people would argue that, we could easily snap out here and it could send a new uptrend. But, I think you're going to struggle because there's loads of fib retracement zones that will act as resistance. And of course, you have the 1877 area, which of course will act as a huge amount of resistance. And then just after that, you've got 1920, etc. So I am bearish for gold. Let's move over to the crude oil markets now. I know that many of you in the comment sections have been waiting for the crude oil view. So crude oil has had a very volatile past couple of weeks, and that's due to the fact this new variant has come out. So all was looking fantastic for crude oil. It was in a perfect uptrend, and then we were hit with this new variant. Well, the good news is that this variant, although it may be much more contagious than the Delta variant, it's nowhere near as deadly. In fact, it's got a 70% chance less likely to put someone in hospital, which of course is fantastic news for everyone. But still, people will still be cautious. People will be reluctant to fly, etc. So, we have seen some weakness, and I think that's fair enough. But as we are slowly coming out of the woods with regards to COVID, we are starting to see the return of the uptrend. And I'm more than happy to share with you, I myself and the rest of the Signal team here over on the Telegram group chat, we do have a long position that we opened down at $69.58. We're targeting up towards $85. Again, if you're watching this video right now and you think, oh, well, fantastic, Max just told me that he's targeting $85. I wouldn't go and buy it here because we've got a potential 12% gain towards the upside, but we could easily snap back down towards the 200-day EMA, which is 8%. And furthermore, if we broke below that, we could easily go and hit my stop loss. So you'd basically be risking around 18% to gain 12%. So that's why I'm happy to share this trade with you. Guys, remember, if you do want to be part of our streaming service, this is where you will then be sent these signals early. When I open these trades, the first thing I do is get onto the streaming website and share these trades with our private clients over on the Telegram group chat, and of course post a more in-depth video. So as I mentioned at the start of this video, if you do want to get involved in our online streaming service, then make sure you go to our website, dailymarketmovements.com. I left the video link in the description of this video. But crude oil, we are very bullish. We've just broken above that 50-day EMA. That wasn't yesterday, it was the day before on Monday, and that was a significant development that occurred here over on the crude oil markets. This to me now tells me that we're likely to go towards $80. I think we're kind of struggling ever so slightly up at the 61% fib level, but once we get a break above that area there, the next stop is that 0.786% fib level, which is bang on at $80 a barrel. And then once you break above that, that sends you up towards 85. Energy prices are spiking around the world. Here in the UK, for example, our energy prices have gone up by nearly 50%. I own several businesses here, my barbershop, the beauty salon, etc. I've seen a huge increase in prices, and apparently it's going to get worse. I think there was an analyst who come out and said that they could even increase a further 50%. So, it's the same for energy, just like crude oil. At this moment in time, there's not enough supply for the demand needed. So I personally think that we could easily see $100 crude oil going into 2022. And I'm not alone. Many top analysts on Wall Street and around the world do see that. I saw some banks coming out saying that crude oil could reach prices of $120 to $140 a barrel. Personally, I don't see it going that high, but I think that we could go and touch $100 again, let alone 85. So I'm happy to share this trade with you all that we opened a few weeks ago here for the crude oil markets. We're targeting up towards $85 a barrel, and I think that within the next couple of weeks we will see crude oil return back above $80 and then go and target my take profit. So crude oil very bullish. And one thing I like is that the RSI is still nowhere near considered to be overbought. We're down at around 56, so we've got plenty of territory still to march towards the upside. Okay, moving on, now that we've covered the commodities and the indices, I'm going to quickly go over a few US stocks that I really like. I've been focusing a lot on trading US stocks because last year on a private portfolio of mine, I really did try and just trade stocks, and my results increased significantly. In fact, I think I gained around 130% on my portfolio last year, and that was with no leverage at all. So I did very well trading some US stocks, and that's something that I'm trying to implement into the streaming service. Of course, we do cover the majority of the stocks that I'm about to show you during today's trading session. So I picked out 3 stocks that I've got my eye on at this moment in time. As I mentioned when we were covering the indices, I really like the Nasdaq100. I like the tech industry. I think it's an industry that will continue to grow double digits over the next decade or so, especially with the likes of the metaverse coming out. So let's go ahead and start with the 3 stocks that I've chosen for you today. So first of all, let's start with PayPal. I'm sure many of you know PayPal. It's an online digital payment wallet. You can use it to send money to loved ones, to pay for things. I know like here in the UK and Europe, you can't use PayPal to pay for stuff in shops yet, but in the US you can. Well, I think I was in New York 2 weeks ago, and I went to Macy's, and an option to pay at the till was by using PayPal, and I think that's something that will eventually come to Europe. So there's plenty of growth with regards to that. But what I really like about PayPal at this moment in time is that they just added crypto payments to their wallet. So for example, someone like myself who has many businesses, I use PayPal a lot. And at this moment in time, I'm having to, when I get paid via PayPal, I then have to withdraw that money to my bank account. There's normally a fee. Then with that bank account, I then have to add it to my Binance account, for example, to buy crypto. Again, there's normally a fee. Once I buy the crypto with Binance, again, there's a fee. But what PayPal have done is kind of cut the fees out. And when I get paid via PayPal, I can just exchange that into crypto straight away. So again, it makes it a lot more efficient and effective having crypto offered on PayPal wallets. And as well as that, there's also rumors that PayPal are interested in starting their very own trading platform. I think this is a fantastic idea. There's been a massive growth with regards to retail traders, crypto traders, and I think that this trend will only continue. It will only grow as we go deeper and deeper into deeper and deeper towards 2025 and then eventually 2030. So this decade, I think we will see some tremendous amount of growth with regards to retail traders and online trading, investing, whatever you want to call it. But I really do like PayPal. PayPal has fallen, I think there's roughly 40% since its highs. We were trading as high as $310 on the 27th of July 2021. It's fallen 42.62%, and from where we're currently trading right now, it's down 38.62%. There's a few factors as to why. First of all, earnings missed. That's what represents this massive gap here. But as well as that, PayPal went to try and buy Pinterest, and investors were not impressed. And that's what pretty much started this massive decline. But I think this stock has massively oversold towards the downside. But for the past 36 days, I think it is, we have, or 39 days, or no, 36 days, we've just been consolidating here around this $190 to $180 level. But I personally see us trading back up towards this gap. First of all, we do need to go and close that gap at around $225. That's something that I think that we will do within the next couple of months. And then once we've broken above that, of course, we do have a few hurdles above us, like the 200-day EMA. We've also had this death cross, which of course needs to fix itself. But eventually, I think that PayPal could trade a lot higher. They've gone out, they've spent a lot of money in adding crypto wallets. There's a lot of news about trading platforms. And of course, they must be interested in the e-commerce business, because that's why they tried to buy Pinterest. And I think investors are a bit worried. They're spending a lot of money. But a company like PayPal, what I really like is that they've got a game plan. They've got a plan to grow, to expand, and I think that this should be seen as a bullish fundamental for the stock. So I could easily see PayPal breaking above 200 within the next couple of weeks, and then as we go into into the middle of 2022, I think we really could go and target the top of this gap that needs closing. So PayPal is definitely one stock to keep an eye on as we go into the new year. Next, I'm going to share with you one of my favorite stocks of all, Nvidia. Nvidia, for those who do not know, it is a chip stock. They create chips. They have many top gaming computers, etc. And they just closed a deal with the metaverse. So this stock is very, very hot going into 2022. It's a growth stock. Its market cap is at around 764 billion. And I know what you're probably thinking. You're probably thinking, well, Max, you just said that growth stocks typically struggle when interest rates start to get hiked. And that is true. But there's a difference with this stock, Nvidia, and that's why I really like it at this moment in time. And that's because on the two previous occasions when interest rates started to get hiked, so an interest rate hiking cycle, Nvidia was one of the best performing stocks. That just shows that medium to longer term, when interest rates are hiked, these growth stocks can perform very well. And that's, Nvidia is the perfect example. So I really like this stock. Again, I'm going to share with you a trade that I sent out on the private Telegram group chat to my streaming service clients. We bought Nvidia on the 50-day EMA at around $279 a share. We're targeting up towards 324, and we're about 75% of the way there to achieving our take profit. Again, just like the Nasdaq100, and I think it was crude oil, do not go opening this trade now because there's only a 7.28% gain towards the upside where you're risking 17%. What you want to be doing is buying it on that 50-day EMA like I myself and the rest of our Signal team did, where there's a 16% gain towards the upside where we're only risking 10%. So not quite a 2-for-1 risk reward ratio, but still a strategy and a risk management strategy that is in our favor. So as I just mentioned, we're 75% of the way there now to achieving our take profit here in Nvidia, and I fully do anticipate us to continue this upside movement up towards $324. Another technical benefit that another technical positive that I've highlighted here down below is the RSI. This level on the RSI, which is around 50, is where we previously broke out during this downtrend, and that's marked a move all the way to a level up at 87. So we were incredibly overbought up at this high, but this similar level at 50 here, we've managed to break above this downtrend, and could that potentially spark a move up towards 70 on the RSI? Only time will tell. But nevertheless, I think this 50-day EMA is offering Nvidia full support here, and I would not be surprised to see it return up towards its all-time highs. Personally, I think this will be the next $1 trillion stock. One investor that I really look up to is a man called Jim Cramer. For those who don't know, he works on CNBC. He came out the other day and said that he personally believes, after going to see Nvidia in California, that I think he went to the Nvidia headquarters, and he's very fond of the CEO. He come out and said last week that he personally believes Nvidia could be worth $10 trillion within the next 5 to 10 years. And I personally believe that as well, especially with the metaverse going where it's going at this moment in time. I think it's going to be the next Facebook, the next big thing, and there is so much room for this stock to grow. And of course, we're seeing a massive increase in EVs at the moment, electric vehicles. For those who do not know, Nvidia provides many chips to some of the top auto companies out there, like Mercedes, for example. All the screens, etc., that are needed to function that car. It's always the chips for those supercomputers are made by the likes of Nvidia, AMD. So I think these semiconductors will continue to perform extremely well going into 2022. And I'm not so worried about interest rates going up either, because as I mentioned, Nvidia has a fantastic track record in environments like that. Third of all, we have a stock called CrowdStrike. This was one of my favorite stocks to trade in 2020. I was buying this stock all the way down at $40. It's now all the way at $200. In fact, it was as high as $300 a share. But if we go back to 2020, just so I can show you how well this stock performed, let me just zoom that out. There we go. I was buying this stock down here in February 2020, and I've rode this wave all the way up to I think I sold around here around $150, but it continued its uptrend. And this is a stock that I really like at this moment in time. As I mentioned, the metaverse, I personally believe is going to be the next big thing, and we have seen an increasing amount of hacks occur over the past couple of the past year or so. There's so many crypto hackers that are basically hacking into US companies and asking for a payment, otherwise they won't stop hacking. And it's companies like CrowdStrike, which has a cloud-based cyber security business or a business model that I think will continue to thrive during these hacking environment. So at this moment in time, the stock's down at 207. That takes us all the way back to May 2021. So we pretty much gained 6 months back on the stock. Many top banks and hedge funds have come out hiking their price targets for CrowdStrike. It has an average price target around $285. So if I just show you where that is on the chart, that's up here around those highs, which is fantastic. That gives us plenty of growth towards the upside. If you was to trade it towards those price targets, that gives you a 37% 37% price increase from current levels. But if you trade it all the way to the all-time high, that's 43.86%, which is fantastic in a growth company like CrowdStrike. CrowdStrike is a growth company, and you're probably wondering, why has this stock declined so much? And that's because the interest rates, I told you, growth companies short term, they do typically get affected by news of interest rates getting hiked. If you have a hawkish Fed, they do seem to struggle. And that's because CrowdStrike's market cap sits at around $50 billion and their annual income is around $1.6 billion. But that is a number that I believe will continue to grow rather rapidly. And I could easily see CrowdStrike trading well above 300. So I like this stock. I think you trade it up towards 250, this area here. One thing that I am concerned about, though, is that we are about to form a bearish crossover, a death cross, where the 50-day EMA pierces below the 200. So that is one negative that I have found with CrowdStrike. But apart from that, I really like this stock, and what I'm kind of hoping for here is we see a move here where the 50-day EMA pierces below the 200, and then eventually it spikes back above, and it's just basically a fakie, and you will continue to see that movement. So that's what I'm looking here for the CrowdStrike stock. But I think that you should keep your eye here. You could put a stop loss, in fact. If you entered here around 207, or sorry, that's wrong. This is a potential trade. You enter here around 207. You put your stop loss just below the swing lows that occurred at the beginning of this month. So you risk 11%. And if you trade up towards that 250 price top target, you've got 21% where you're risking 11%. So it's pretty much a 2-for-1 risk reward ratio. And if you did choose to trade up towards that average price target amongst banks and hedge funds, then you could potentially gain 40%, and you're risking 11%. So that's a 4-for-1 risk reward ratio. That's why I really like the setup at this moment in time for CrowdStrike. Moving on out of the US stocks, let's just have a quick look at XRP. XRP, for those who don't know, is my favorite cryptocurrency out there. I'm not interested in Bitcoin. I think Bitcoin's a load of rubbish. If anything, Bitcoin is like a digital gold. Don't get me wrong, Bitcoin acts as the mothership of all cryptocurrencies, but when you look at the Bitcoin technology, the only thing that's impressive to me, for that blockchain is that it hasn't been hacked yet. I think there's many other coins out there which have much better technology than Bitcoin and Ethereum. You had the likes of Elon Musk, who even come out and said the exact same thing last week. He said that Dogecoin would actually work much better as a blockchain compared to Bitcoin. So if Bitcoin does have a future, I do see it as a digital gold. But when it comes to transactions and sending money, XRP is the cryptocurrency where you want to be. I always hear the same thing when I advise people on what cryptocurrency could be hot going forward. I always say XRP, and I always get the same answer. They say, "Oh, Max, doesn't XRP have a massive lawsuit over its head?" And that is correct. The SEC have claimed that Ripple XRP is not a currency. It's it's pretty much like a stock, and we're just trading Ripple. So Ripple owns XRP, or owns the majority of coins that are currently in XRP, but they are slowly releasing them to the public. But XRP, for example, the average transaction costs $0.00002, and the average transaction time to complete a specific transaction is 3 to 5 seconds. With Bitcoin, the average transaction cost is $3.52, and it can take anywhere between 30 minutes and 5 business days. Ethereum, the average transaction cost is $52, and again, it can take anywhere between 30 minutes up to 5 business days. So, massive difference. And personally, I think there was a little bit of corruption going on amongst the SEC, because the previous chairman of the SEC personally holds Ethereum, and when Ethereum and Bitcoin started to go in their bull run, which was on the 17th of December 2020, on the same day, that is literally when the old chairman of the SEC put this lawsuit on XRP, which of course made its price devalue by roughly 68%. But since then, since we gave time for this market to settle, we have seen XRP increase roughly 366%, and from a date when XRP was given a lawsuit, it's up around 66%, I believe, from those current levels. So I really do like XRP. This lawsuit is expected to come to an end between March and May 2022. I've held XRP for the past 4 to 5 months, and my position is currently down by roughly 25%. But not to worry, I have big expectations for XRP. In fact, I think we could see a return to its previous all-time highs, which was up at $3.30. Within the next 5 to 6 months. If we had news tomorrow and someone come out and said, I know there's been a settlement between the SEC and the XRP. I personally think we could easily see a huge spike towards the upside within the space of 4 weeks, where we could go up towards $3, where I would be, as it stands, I would expect to, potentially make over $1 million if that did happen. But again, I personally think that XRP could go even higher. My medium to longer term target for XRP is all the way up at around $13 to $14. And you might think that I'm crazy saying that, but that's exactly what Bitcoin and Ethereum have done. I think Ethereum has just gone and touched that 4.236% fib retracement level, which would mean XRP would be up at $13.75, and I'd make around $3 to $4 million if that was the case. So I have big expectations for XRP. I think it is by far the best technology out there. I think that it will overtake Swift payments. That's kind of what XRP's goals are. At this moment in time, banks work against each other. When you send money from one country to another, it can be very costly. There's FX fees. It takes anywhere between 3 to 5 business days, where with likes of XRP, it's instant and it costs $0.0002. And XRP are trying to make banks work together instead of against each other, and I think it's the future. We've already seen some top countries come out and finalize deals with XRP or with Ripple. We've seen Japan, the UAE, so that's Dubai, Abu Dhabi, do a deal. India, we've seen Switzerland, and we've seen many South American countries also sign deals with XRP and Ripple. So I think this is a cryptocurrency to watch. I think that its growth will be huge going into the next couple of years. And Ripple themselves, the CEO, come out this year, or I think he came out last week and said that this year was by far their best year yet, and they only expect it to get better. Are you going to see some volatility with XRP? Sure, of course you are. You're going to see plenty of volatility. You're going to see loads of sharp movements like this, where you randomly decline 40 to 50% within one day. But that's the crypto markets. But on the flip side, it only takes a few days for that to kind of fix itself and to see a spike towards the upside. So XRP is a cryptocurrency that I'm watching. I think the next fib level is all the way up at 1.35. So that, from current levels, that represents a 50% gain. But as I mentioned, once this lawsuit settlement comes in between March and May, and by the way, I did forget to add, I've listened to hours and hours and hours and hours of lawyers reviewing the case, and many, pretty much every single video or lawyer that I've listened to, that they've said that this SEC lawsuit is a load of rubbish. Ripple and XRP is clearly a currency, and they all expect Ripple to win the case. And as well as that, we had JP Morgan come out about 3 or 4 weeks ago and state that they fully expect Ripple and XRP to win the lawsuit, and they expect Ripple and XRP's price to explode towards the upside within the next 12 to 24 months. So that's something that I'm happy to wait for. Again, this is just money I've got sat on the sidelines. I'm not really looking at it from a day-to-day basis. It's more longer term. But if we get up to $3, I will turn that pot of money into over $1 million. And of course, if we get to my target up at around $13, that will make me around $3 to $4 million. So I am happy to sit with this pot of money on the sidelines whilst I trade other assets, on more of a day-to-day basis. So that's just a quick look at XRP. I think at this moment in time is a good entry opportunity. I think what we're trying to form here is a cup and handle pattern. There's your cup, and I think we're just trying to form that handle. We could see a return up towards $1, and if we break above that, that could be what sends us up towards that 1.35 level, which of course is that next Fibonacci level up at 0.38%. Last but not least, we're now going to touch on another cryptocurrency. This one is very, very small. And I think there's currently 24 of you watching this stream at this moment in time, and I can guarantee every single one of you will not know what this cryptocurrency is. This is one I put a pretty big bet on. It's a very small cryptocurrency. It's a market cap of roughly $20 million at this moment in time. But as I mentioned, the metaverse is the next big thing from my personal perspective. And this is it. This is Townstar. It IPO'd on 18th of November. We saw a huge spike. I bought Townstar around 60 cents. It was around this area here. I think it was around 78 cents. I bought it. So let me just highlight for you. This is where I entered Townstar, and pretty much since I entered, we went on a wild ride, and we increased a significant amount. At one point, I was up 218%, but guess what? I've kept my position and I'm now trading minus 10%, but not to worry. I have big expectations for this cryptocurrency. For those who do not know, this is what you call a play to earn crypto game. So this is a game, for those who do not know, there was a game called Farmville. Now, this was owned by a company called Zynga. And the CEO of Zynga has now gone and created a new company called Gala Games. And Gala Games focuses on play to earn cryptocurrencies. And Townstar, this is the coin that I own, Townstar, they have a flagship game. So that's Gala's flagship game, which is Townstar. So I believe that this is the next big thing. The play to earn cryptocurrencies. We're already seeing a lot of population in countries like Venezuela and the Philippines, because these players can genuinely make $100 to $200 a day, which of course in countries like that is a lot more than what they would normally make if they were working a full-time job. So play to earn crypto is huge, and as the game grows, so will the cryptocurrency. And I think this is just the beginning for the likes of Townstar. So this is one to definitely keep an eye out for going forward. I have big expectations. I don't see why this couldn't go to $4, $5, $6, $7. Could even go above $10. As I mentioned, at this moment in time, it only has a $20 million market cap, and we've seen other games like Axis, for example. When it first IPO'd, it was down here at $20 million, and now it's valued at nearly $9 billion. So if that was to happen here with Townstar, for example, that would make me a very rich man. But again, I don't want to be greedy. I don't want to have expectations that this market cap could go as high as 1 billion. I would be happy if it just goes to 100 million, which is 5x. So if it goes at 500% from here, again, I will still make a significant amount of money. So slightly more of a risky trade here. If you do want to get involved, there's only a few exchanges that offer Townstar. It's quite a small coin. I think it's ranked 2,800 on the crypto market. That's how big its coin is. It's really small. So OKEx is a great app that you can download off the App Store to buy it. But yes, I think it's definitely worth a punt. This crypto gaming industry, for those who don't know, I'll just go onto their website actually, just to show you what the game kind of looks like. Let me just open a new tab. Townstar. So this is their website, and it's pretty much the exact same concept as Farmville. So you have a map and you create a farm, and every week it refreshes and it gives everyone an even playing field, and they can generally earn real money, real cryptocurrency coins that they can exchange for US dollars. And yeah, so I think that this is going to be the future, and this is going to be a big part of the metaverse. This is something, it's an industry that's growing as well with NFTs. You've got the option to buy NFTs to add to your farm here on a Townstar. So I think that is going to wrap it up for today's video, guys. Thank you very much for tuning in. If you haven't already done so, then please give my streaming website a view. If I just pause that, sorry. Go and take a look at my streaming website if you want to receive more videos like this one that I've done today, where I offer more in-depth videos. Then the streaming service is the place to be. And of course, don't forget, once you sign up to the streaming service, you'll be sent straight away an automatic email which will give you access to our to our Signal group over on Telegram. So that'll give you access to both the website and the Signal group over here on Telegram, where we cover crypto markets, indices, stocks, commodities, and of course we have various learning content towards the bottom there. So YouTube is a fantastic place to be for brief, quick updates on markets. But if you want the full package, then the streaming service is the service to be subscribed to. And you know, we only charge a very small fee of $19.99. So it's pretty much the same fee as your Netflix subscription. But thank you very much for tuning in for today's video, guys. I've left the website link at the bottom of this video description. dailymarketmovements.com is the website.